Hey everyone, hope you're well. We are back with another edition of #AskRobCo with James Wild. James has been travelling, he's been away. He's back with us again this week. Welcome back, James.
Thanks very much, Rob. How have you been? All good?
Yeah, all good. Thank you very much. Congratulations to everyone that have won industry awards this week. A lot has been going on within the finance and the property and the mortgage lending industry. So congrats to all of you. And for the ones that haven't made it next year or with the other awards, hopefully you'll all be successful. But a great testament to everyone in the industry, both from a lending and a valuation perspective. What have we got, James? New week, lots going on. What's the latest updates?
Yeah, thank you, Rob. So in terms of data this week, new instructions are just over 350 this week, which is the second highest new instructions figure we've seen in 4 months, Rob. So, you know, the market is gaining a little bit of momentum after that period where the stamp duty threshold ended at the end of June. We saw July figures just dipping off in terms of new instructions. Things now seem to be gaining momentum as we move through September. So like we said, they're second highest new instructions we've seen in 4 months. In terms of the sold figures for this week, we're 147, another strong week in terms of sales. We're back up in terms of what we've seen, sort of the upper quartile really of the year, 147, just pushing 150. So more positivity there in the market, which is 3 consecutive weeks now of those sold figures being 150 to 140. So like I said, positivity in the market there, which is slightly fueled by increasing new instructions here in London.
Great, that sounds exactly what you would expect at this time of year. As we've been repeating the last few weeks, everything's very seasonal, so the schools are well and truly back. And now the forefront of people's minds are either putting the house on the market, moving home, or finding something new, which is why notoriously October and November are strong months, and we are on course for that to be the case.
Yeah, and just one other point in terms of the data for this week. We've seen quite a high number of price reductions, 209. It's one of the higher we've seen of the year. It's just there's maybe a slight correction there on some of the properties whereby it was slightly an aspirational asking price on some of those properties which have been launched to the market, which given those price reductions, hopefully those could come to fruition of a sale and transact in the market.
Yeah, I think that's really interesting and something for us to watch.
And just whilst we stay on in terms of data and transactions for this month and this quarter, August 21 this year, Her Majesty's Land Registry reported that there was 98,300 sales in the UK, which is 20% higher than August 2020, which again, positive numbers here, Rob. August 2020 last year, there was some momentum in the market there, and also 32% higher than we saw in July 2021. Obviously with the transaction volumes just having a dip for that month as the market was going through a brief correction period. So again, as there's a slight lag with Her Majesty's Land Registry data, it does bring us sort of news of August being a generally positive month on a regional and national level across the UK.
Yeah, I think generally the market has been busy. I've been out all week meeting clients and getting the information firsthand in terms of volume numbers, transaction numbers, valuation numbers, and all signs are positive that the remainder of the year will remain robust and perform in a good way. So I think everything you're saying is backed up and supported by industry figureheads, and I think it's exciting to look forward to.
Definitely, and based on our data what we've got for September so far, it would indicate some positivity in the market in terms of transaction volumes, certainly here in London, and it's just whether that mirrors the remainder of the UK regionally.
And also another thing to add on the back of that, and it's something we're repeating, but I am now seeing a lot more of Middle East, Far East, foreign travellers are returning to the UK. It's very clear in the sense of the transactions that we're seeing. It's very clear in sense of some of the valuations that we're going to, that the the UK is very, very, very much open for business now. And so that lag that we've been talking about for certain types of buyers, purchasers, especially the travelling position, I think we're seeing the end of that now. And with the restrictions, the final restrictions being lifted on travel last week, more or less, or simplified, should I say, I think again that's just going to open up the door to the ease for the investor market to return, and we will see in the coming weeks and months the positive results of that.
Yeah, welcome news for holidaymakers in the UK. Just while we're on the sort of prime sector speaking, there was a new record set within the wealthy district of Sandbanks on the south coast near Bournemouth this week, as Harry Redknapp's former house sells for just under £10 million, a super prime sale there on the coast. So again, Rob, as we've spoken this year, for trophy assets and one-off houses, there has been those premiums paid, and that's what's really driven the buyer demand, hasn't it?
Absolutely. I think there's been a lot of transactions where Mrs. or Mr. ultra high net worth have just said, I want to make the move now. I want that 3, 5, 10-year move now, and I am willing to pay top dollar to get that property, and that's exactly what I'm going to do. And I think 2021 has been the year where that's really come into fruition, and a lot of transactions we've seen have reflected that buyer appetite, especially from Mr. and Mrs. ultra high net worth.
Yeah, and as we saw here in London this week, the Northern Line extension opened, which will serve 9 Elms and Battersea as 2 new tube stations open as a splinter branch of the Northern Line. And this comes at a time with TfL have obviously halted other projects, other major refurbishments in terms of existing stations, but also the potential Bakerloo line extension has been mothballed for the time being. And you know, this could be the last new stations we see for some time, Rob. I think. I mean, the last extension of the Northern Line, 1926. I've got here on the data. But you know, I mean, these stations are definitely going to be extremely well used in that district, the master plan district. 20,000 new homes. It's obviously one of the most expensive ever in terms of cost, which you've seen here in the UK in terms of a master plan regeneration area.
I mean, as many of the listeners will know, and many of our clients will know, that Battersea Power Station and 9 Elms is very close to home. It's an area that we specialise in, and I've personally been working in for many years. So it's actually a momentous week this week that those stations have finally opened. You know, sometimes there are delays, and you know, you can see what's happened with Crossrail HS2. So for those underground stations to now be open is a major boost for that local economy, local industry from an infrastructure perspective, and it should help support the growth of those locations in the years to come. So that's really exciting news, and it's momentous. It's a huge moment for the power station itself and the wider area of the largest regeneration scheme within the UK from a cost and financing perspective. And I think that's just great news for everyone working in that area, everyone living in that area, and everyone involved in the projects.
Definitely. I know that the Clipper and the Uber boat was obviously a new stop in Battersea there around about a couple of years ago now. Obviously, logistically a far easier addition to the route, but you know that's been very well used each morning and evening by the residents of Battersea and 9 Elms.
Brilliant.
In terms of other news, we've got the July inflation figures, which jumped to 3.2%. You know, that is steadily rising for the year, and as we mentioned earlier in earlier shows, analysts and commentators have been speculating that inflation is going to hit or possibly exceed 4% for the year, and you know this could spark further calls for an interest rate rise as these remain at 0.1%. You know, record lows, and for such a long duration of time, Rob.
I think that's going to be an interesting one to watch over the remaining part of this year and 2022, because a lot of the lending has been driven with record low interest rates and the pricing of the products within the marketplace. So it will be interesting to see what effect, if there was to be an interest rate increase, what effect that would have on product and pricing in the mortgage market.
Yeah, I mean, I think that those record deals we're seeing at the moment in terms of the competitive mortgage rates which are being offered, that those would sort of have to rise. It would be the only way for it. But for the time being, as we've mentioned, sort of 2-year fixed rates about 0.83%, absolutely record lows. 5-year fixed, Nationwide have got a deal, as we mentioned, 0.99%, just record lows. But it's a bit of a wait and see for as we move into the Q4 of 2021.
Great. Any other news for this week?
Yeah, in terms of some agency news, JLL has launched a new short-term rental platform, possibly to rival Airbnb, but it's just difficult on what their stock levels will be and how competitive they'll be on a national level in terms of across the UK. But they've got almost a monopoly, haven't they, Airbnb, in terms of domestic holidays in the United Kingdom, which have been absolutely booming in the last 12 to 18 months. So a bit of a wait and see there. Obviously an early adopter to the new travel trends which we've seen in the UK. In the building and built environment and construction sector, the National Federation of Builders has called for more government support as the construction material shortages continue in the UK, which at some stage that could cause some hold-ups and some timescales for delivery of new build homes, new blocks of flats. So whether the government will be able to ease anything there in terms of the importing of the construction materials, raw materials required.
I think that's a fascinating one as well, a fascinating situation that's ongoing. How are building schemes and projects being completed? What is happening with time overruns and, more importantly, cost overruns, and the implications to profit margins and so on. So I think that's really going to reach a climax over the next quarter.
Very difficult for those small builders, medium-sized builders, and even self-build. A lot of the construction materials are going straight from the factories to the major sites which are operated by the top UK house builders. So a real strain across the industry there. Brilliant.
James, anything else for this week?
That's it from me.
Great to have you back, always with great detail, great information, great data. Great to have you with us again this week. The audience, thank you for supporting our journey. Loving all the messages that I'm receiving, loving all the support that we're getting every week. It's really great, it's really motivating, and we're just here to serve the property community, the lending community, the valuation community. We're here for you, and we're going to keep on feeding you all the information, all the up-to-date data that there is out there as we continue on our beautiful journey with you all. So thank you for everyone on the YouTube, on the podcast, on all the socials. Keep talking to us, keep speaking, keep asking the questions, keep updating us, and we'll do everything we can to carry on supporting and helping you. Have a great week. Enjoy the semi-Indian summer that we've got, and we'll see you all next week.
Thanks very much, everyone.